Hey, it's Connie from Prosperity Finance, sharing the best financial tips so that you can be more successful with achieving your financial goals. We all know the coronavirus is really having an impact on the economy. If you are a small business owner, especially you are in the service industry, then you probably get hit the hardest. Now, last weekend, I went out with my family to have a dinner. I normally come to this restaurant and I have to wait for my table. This time, I was shocked. The restaurant had no people dining, and all the lights are off except just at reception area there was a small lights. It's still on, and I have to press the bell to get attention. A lady came out who's the owner of the restaurant. Looks really sad. While I was waiting for my food, I had some chat with her and understand that her business was impacted a lot by the virus. I really feel the pain because back 2 years ago when the property market went through the downturn, and at the same time the bank tightened up credit policy, my business was hit as well. As a business owner, there's always some external factors that are outside our control. What do we do? How can we overcome, that kind of a downturn? If we can survive, then our business can grow tremendously, and we can provide food and shelter for our family. So it's really important that we can perceive those risks and then deal with it. I know I can't help these business owner to come out of kind of a business recession, but as a financial advisor, I'm just thinking if they have a home loans, what are the 5 area or 5 tips I can provide to them so at least their personal assets has a minimal impact. Today I'm going to give you these 5. So number 1 tips is not to put all your eggs in one basket. Now, what I mean by that are twofold. Number 1 is make sure your property security are split with the different banks. Now, if you have a home and a couple of investment property, make sure they are provided the security with different banks. There's many reasons for that, but probably the most relevant scenario would be, say, if you want to sell one of your rental property just to, release some cash from selling the property. What you probably don't know is that if you have other properties secured with the same bank, it's not just you pay off the loan that you borrowed in the first place against that property. It's actually the bank will take a fresh look. They will reassess your borrowing capacity. In the worst scenario, if your business is not doing well, they will ask all the sale proceeds. So you won't able to keep 1 cent of the sale proceed. I could be heartbroken. And that's real because from time to time, I hear people telling me, what do I do? The bank asked me to, pay back everything I sell for. That's true. That's how the bank, assess partial discharge, which means you still have other loan and other security with the same bank. So make sure you split the security. On the other hand, is make sure different accounts type with a different bank. For example, business account with one bank and your home loan with another bank. Sometimes I heard people say, it's so convenient for me to borrow money if my business accounts and my personal accounts are with one bank because they can just see everything. Yes, I agree. It's very easy, very convenient, but it's very dangerous as well. So sometimes you have to choose what is the most important. Is it protection the most important? Then you have to compromise the convenience. Okay, so try to separate different account types with different banks. So that's what I say by splitting your eggs, not put in one basket. Number 2 tips, make sure you have either a revolving account or offset account. Every bank in New Zealand has a revolving account. Some banks also have offset accounts. The difference between the two are really subtle. There are 2 main benefits. Number 1 is that as a business owner, we know our cash flow is not constant. Sometimes you have a good month, sometimes you have bad months. Normally, we set the repayment amounts for our home loan is at a comfortable level. At least you can service that amount of payments. What if you have a good month? What if we can use that extra money to offset our home loan so that we can minimize the interest costs? So that's one main benefit with revolving offset accounts. Now, the second benefit is that your money is still there. You can still control. By offsetting against your home loan doesn't mean that money is gone. It's there. Instead of paying the loan off, you will lose that flexibility. So make sure you always have some revolving facility. Back to 2008, when the GFC happened, some people had to unfortunately mortgage sell their property. That was because their cash flow is broken. They can't service the repayment. If they had revolving accounts, they could survive, and their wealth probably doubled by now. So it's important that you use revolving as for emergency, and always have some money put aside. So that's number 2 tips is have revolving accounts or offset accounts. Number 3, make sure you only pay principal for one loan and keep other loan on interest only. The purpose of this is make sure that you can pay off that loan quicker, because you kind of focus all your cash flow into these accounts and pay the minimum on the interest only loan. That way, you can pay off that loan quicker and discharge your property, which means your property become mortgage free. So there will be less control from the bank against your personal assets. Normally, the principal, the one that you pay in principal is your family home. Once your family home is paid off, then you start paying principal on your rental property. And then once that paid off, pay the next rental property. Not pay principal on all accounts. Otherwise, all your security are there forever. So that's number 3 tips. Only pay principal and interest for one property and keep interest only on others. Number 4 tips is also to do with protection. Make sure your assets are not under your personal name. We all have a good intention, the client best interest, and grow the business, but you never know, one day you'll cause fire. So if anything happens, you're potentially liable for something, then your assets, personal assets, also it's under that kind of a risk. They can sell your property to repay your obligation. So make sure your assets are not under your personal name. What entity is the best? You need to consult with your accountant or solicitor, because it's outside of a service scope. But I just want to point it out to you, make you think. Now, the last tips would be make sure your loan is not too big. If you have a lot of a loan, like a big size of a loan, make sure that each tranche, each account is relatively small. There's no standard kind of size, but I would say, rule of thumb, if your loan is over $500,000, make sure you have more than one account to split the balance. The reason being is when the loan come off rate fix, if the rates goes up, then at least, only a portion of your loan, you have to pay more. Whereas other loan is still, keep the constant payments. So that help you to minimize repayment risk. So I believe these 5 tips are extremely important, especially if you are small business owners. It doesn't matter you are running a restaurant or any other type of industry. You're always exposed to some, external factor that out of your control. So please make sure your home loans has these 5 things in place. If you don't have any of these and you want to know how to improve, feel free to contact us and we will help you. And if you have your family, friends, a business owner, please feel free to share this article with them so that they can benefit from that as well. Thank you for watching. I will see you next time.